Good morning, everyone. This is Pat McParland from Opus. Welcome to our webinar this morning, Brexit, what are the implications on global anti-corruption efforts? We're really happy to welcome you this morning, and I'd like to start by introducing our speakers today. So our first speaker is Nick Parfit, who is Product Director at C6 Intelligence Group. And C6 is a financial and risk due diligence group that focuses on anti-money laundering and other financial intelligence. Nick will tell you a little bit more about C6 when he opens his part of the discussion. Nick has over 18 years experience in project and program management, business process change and implementation of technology, and business solutions in leading global financial services, telecommunications, and public sector organizations. In particular, he focuses on financial crime compliance, consulting, and industry experience with financial institutions in AML, KYC, and sanctions operations. So we look forward to talking with you this morning, Nick. Also on the line, we have Magali Pimentel, who is our head of marketing here in the EMA and APAC regions at Opus. And Magali has a long and storied career in marketing in the financial and compliance areas. Before coming to Opus, she worked at Dow Jones in risk and compliance for many years. She also has held positions at Red Flag and numerous other organizations. So what we're going to do this morning is actually have an interactive discussion between Nick and Magali. We encourage you to participate in the conversation. You can ask questions at any time. Use the questions tool on your GoToWebinar control. So we will take questions at the end, as we always do, and we will also, as I said, take questions during their discussion, so feel free to pop in. So we're going to talk about a very timely topic, which is Brexit, but specifically the impact of Brexit and the intersection of Brexit on global corruption and what's happening with that today. So before we do that, I just wanted to spend 2 seconds, as we always do, talking a little bit about Opus and what our mission is and why we have these webinars. So our mission is to free business from the challenge and complexity of managing customer, supplier, and third-party risk. And thinking about something like corruption, that's particularly apt. If you think about fines for corruption and things like that, you may think about the burden and complexity of dealing with that. We like to focus on the freeing yourself from that and the ability to navigate new waters, if you will, and expand into growth and dealing with new areas, expanding into new global markets, for example, where standards for bribery and corruption may be different than in more developed markets, but navigating those is certainly a necessity. And so how do you deal with those and free your business to grow? And so I think the topic today is very timely, and as I mentioned, we see the free your business as let's look at that as an advantage and how we free you from these concerns so you can focus on your priorities and not on worrying about risks, but focusing on your priorities so you can serve your customers, grow, thrive, and innovate. That's our goal here at Opus. So with that, let me turn it over to our keynote speakers, Nick and Magali, and talk about Brexit and the impact on anti-corruption. So Nick and Magali, over to you.
Thanks, Pat. And thank you for joining us, Nick. So we are here today to talk about Brexit, which we really can't get away from, but specifically the potential implications on anti-corruption efforts, and not only in the UK, but also further afield, which is something the OECD voiced concerns about earlier this year in a report that they published focused on the UK's implementation of the Convention on Combating Bribery of Foreign Public Officials. So really, since the introduction of the Bribery Act here in 2010, the UK has made some good progress in the fight against corruption, and the OECD's report does acknowledge the UK as a major enforcer. And some of the things we've seen in recent years include a number of completed foreign bribery cases and several more underway. We've recently introduced deferred prosecution agreements and some other legislative reforms. And the fight against corruption really does have high-level political support. So given progress to date and government commitment, is Brexit really likely to impact anti-corruption efforts? And that's what we're here to talk to Nick about today. So Nick, first question for you. Do you feel the government is distracted and that as a result, progress may slow down or halt?
Well, firstly, thank you, Magali and Pat as well for this opportunity to be on this webinar. We are living in interesting times, which I know is a Chinese proverb, and in many respects has been more of a curse than a blessing. So it is timely that we discuss this. Brexit is, 18 months old at the moment, and I think only as of about an hour ago have we had the go-ahead in the European courts to actually start stage 2. Or at least to have a final vote on stage 1 of the Brexit negotiations. So there's clearly been a lot of noise going on since then, but in reality, I've seen very little change. It seems very much, business as usual. I understand, from the OECD's perspective, that there are potentially concerns that the agenda is stopping progress. But in reality, I'm not so sure that's actually happening, and for a number of reasons, as you rightly point out, Magali, to start with, the UK has been instrumental at the fights of with the Bribery Act of 2010. We've been right at the forefront of this, helping shape policy, helping implement processes and practices, and even if you look at Section 7 of the Bribery Act, which was initially skeptics voiced a lot of concern because of its extraterritorial nature and its detriment potentially to business in the UK. And I don't see us moving away from that, or nothing's really changed from that kind of messaging since that came into force. Even if you look at recently, there was an EY report, Bribery Digest, in September of this year, which interestingly pointed out a recent High Court judgment of May of this year, where the SFO had a ruling against the Eurasian Natural Resources Corporation. And this was on the issue of privileged information and documents into allegations of fraud, bribery and corruption in jurisdictions such as Kazakhstan. And this provoked concerned legal comment as to the potentially far-reaching consequences for litigation and legal advice privilege in the criminal context. The practical impact of that judgment is that it is now more difficult to claim in a criminal context legal privilege than in a civil context. The result of which is, depending on the facts in each case, that there is a much narrower definition of documents that qualify for litigation and legal advice privilege in the context of investigation. So if this ruling holds up, it means actually that when it comes to criminal investigations for anti-bribery and corruption, companies in the spotlight should regard that virtually any material that they possess could be opened up for inspection. So I think that's a very good recent example that actually the laws there are helping to strengthen and not weaken that argument.
Okay, no, that's some good points in there. So even if it's not conscious, do you think that a lack of focus or the increased focus that the Brexit negotiations are going to require, do you think that may impact the development of any new initiatives or any new regulation needed to remain at the forefront against the fight against corruption?
Well, I think it's too early to tell. As I said, I haven't seen an awful lot of change, I suppose, in the last 18 months, but the telling piece will I think, be around the 40 findings from the OECD report. And exactly how UK PLC takes that forward in terms of implementation, in a very similar manner to how we adopted the FATF 40+2 recommendations many years ago and had a commitment over many years to implement and strengthen and follow that guidance. So I think it's probably too early to tell whether or not these things are that they will stall because of Brexit or that they will be adopted. But my gut sense with all of this is that we will not be walking away from a Brexit in the extreme, and we will probably land somewhere in the middle, which means that the ongoing unification within Europe will still happen, because these are global requirements and global problems, and they require global solutions. And I don't think it's something that the UK is necessarily going to suddenly walk away from just because we potentially are no longer part of the European bloc.
Yep, that makes sense. And what about, you know, there clearly is some uncertainty currently about the UK's economic stability following Brexit. Do you think that that is having or may have an impact on enforcement actions? And as an example, there's the Airbus Saudi Arabia bribery case at the moment, and some questions around that.
Certainly. So that is an interesting case indeed. I think the challenge with that is that the headline is probably too political, really, to be put into the bucket of whether or not Brexit is having an actual impact on that. We only have to look back to the BAE scandal back in 2006, you know, which was along similar lines, if you like, in terms of bribery. And ultimately, that was overruled by then Prime Minister Tony Blair, stating national security. So from my perspective, you know, this particular case could well be far too political, and therefore being in and out of Europe would be a moot point. However, you know, I say, you know, if the UK isn't in Europe, then does this really impact the UK not abiding by Article 5 of the OECD Anti-Bribery Convention? So I think if we were to look at other anti-bribery and corruption cases, then potentially you know, we would still have a desire to prosecute and go through the process of investigation without, you know, Brexit necessarily being a challenge. But I think one of the findings actually from the OECD report, which was interesting, and bear in mind, obviously we're still part of Europe, but is really the lack of effectiveness that. You know, no cases have yet been detected on foreign bribery cases across the UK FIU, the Financial Intelligence Unit, HMRC, nor in the UK's overseas territories or in UK export finance. And they also noted that with over 2 million SARs that currently exist, there is no corresponding record of any SFO foreign bribery investigation being generated by the information provided from UK FIU. So I think there's probably more structural issues that remain within the current framework, and whether or not Brexit negotiations going forward will impact those in terms of the nature of prosecution, probably is still too early to tell. But I suspect it won't have any significant bearing on it.
Yeah. Okay. And staying really on the theme of economic stability and profitability. If companies are concerned about their ability to compete internationally following Brexit, there's been some talk about this. Do you feel that this may lead to some pressure on the government to water down regulation? So
I would say, I mean, if we go back to, I made that point earlier about the Section 7 of the Bribery Act and the fact that when it was first introduced, it was very controversial because of the fact it was extraterritorial, and you know, the people who viewed it at the time said that it could be a major disincentive to foreign investment in the UK for two main reasons. You know, one is that foreign companies investing in the UK may have their global affairs come under the scrutiny of the UK's anti-corruption bodies, which would necessitate potentially much more oversight, and also the ability for them to implement adequate procedures within the UK, which ultimately becomes a bureaucratic cost of doing business within the UK. However, that's been around for some time, and we haven't. There's been no case I can come across where it's actually negated investment from that perspective. On the flip side of things, too, we may actually benefit in some respects. If the UK is in fact at the moment looking to lower its corporation tax down to 17% by 2020. So that is potentially positive in terms of business efficiency in the UK. And I would, also very much doubt that, knowing governments in general, they don't tend to, reverse course when it comes to comes to legislation. So, being part of Europe or not, the UK will still want to be seen to be, a place with strong practices, where it's driving regulatory policy and review and insight, and as be seen as a global influencer. So I would say that on balance, we in the UK probably wouldn't want to move away from that position, because actually it might be a disincentive for businesses to operate because of the global connotation of potentially operating within a weaker regulatory framework. A couple of other points I'd probably make, said it's probably too early to tell, but it'd be very interesting to see what happens with these 40 OECD recommendations and the appetite that the UK has to adopt those and implement them, and whether or not that will have a bearing on company or the attractiveness of the UK to do business. But having skimmed through a number of them, a lot of them seem to be quite common sense, if you like, and just good practice, particularly when you align it back to more mature risk frameworks around anti-money laundering and counter-terrorist financing. Those sorts of practices and implementations and controls and policies are very applicable to the corruption side of things as well. And I would probably finally say that the UK hasn't. If you look at GDPR coming in May, May 2018 next year, we haven't shied away from adopting that. The UK has obviously adopted and aligned to the 4th Anti-Money Laundering Directive, and still actively shaping the 5th Anti-Money Laundering Directive, with a view to implementation of that. So I very much doubt that the government suddenly changed tack on all of this and suddenly moved to a less rigorous regulatory framework.
Yeah. So I think it's, as you say, it's a case of letting time play out a little bit and see where we land. So just coming back to the global nature of business and regulation, I think one of the things that has come through loud and clear in the fight against corruption is global cooperation is key, between governments, between regulators, and society, really. And in the EU, we've benefited a lot from agencies like Europol and Eurojust. So when Brexit happens, to whatever extent it does happen, do you think that the level of intelligence and information that we share with EU agencies can carry on to the same extent? And do you feel that there's any risk there that we wouldn't necessarily have access to all the information we need to do as good a job as we have been doing?
Well, the UK has a 45-year relationship with Europe, and I think this will endure regardless of what actually happens. Even in the worst case, in that Brexit does happen, it's a very clear break. I still think the informal agent or the informality between agencies will still exist. I know that on the books it says that if Brexit happens and we're no longer part of Europe, then we can't be part of Eurojust, for example. However, I'm sure these informal information sharing arrangements will still occur, because it's in everybody's interest at the end of the day. And I think a lot of these agencies are much more supernatural, in scope and reach than probably their mandate would appear on paper. And don't forget, we still work very strongly, as being part of NATO, obviously the OECD, the US, the FATF, for example. So even if there isn't a formal supranational body as a backstop, i.e. Europe, I still think the way that our agencies tend to move towards, greater cohesion. And we only have to look at the ongoing EU unification of the military and UK into NATO would, for me, suggest that we will not be pulling away, and we will only be getting stronger in terms of sharing information and data across borders for the global benefit of fighting, money laundering and global corruption.
Okay, so let's move a little bit further afield now, and go across the pond. So in the US, the SEC has recently appointed a new head of FCPA, Charles Kane, who has a bit of a reputation for pursuing non-US companies in a bid really to level the playing field for US organizations. So what do you think we can expect from that appointment? And is it likely that, given Brexit and given perhaps some of the concerns that it may detract our focus from anti-corruption, do you think that the US will now have the UK firmly in its sights?
I think the short answer would be absolutely. I think if we were to look at a case study, we don't have to look back at how anti-money laundering and counter-terrorist financing processes and fines for sanctions, also over the past 10 years have certainly been shaped very much from the US, particularly in terms of the extraterritorial nature and the huge fines that EU and particularly UK banks have had to pay, the deferred prosecution agreements that have been going on. And I know a lot of that is off the back of the way the US has pretty much shaped and dictated policy in that field. So I would very much expect the same thing to be happening with Mr. Kane in the coming months. Whether or not it'll be the UK to start with is obviously up for debate, but given the concentration of companies here, the global reach of organisations and their sheer size, I would imagine that they will be very much in his crosshairs as a focus. So, I think in terms of what businesses are doing at the moment, they should learn lessons from anti-money laundering and CTF fines in the past, and look at the financial institutions and how they have been targeted and what they've had to do in order to remediate, in order to implement the right controls and frameworks, and also to ensure that they are actually practicing what they preach, and make sure that they don't fall foul of US regulators.
Yeah, that definitely makes sense. So what would you say to any UK companies who may be feeling that they can reduce their focus on anti-bribery and corruption while people may be distracted with other things?
Well, I would say it's, you absolutely do not want to be doing that. I think a lot of companies already have, a policy in place around anti-bribery and corruption. And they will, to varying degrees, depending on the size of the organisation, the field that the industry they operate in, the size of their business and geographies, will have probably adopted it in very different manners. I think the financial institutions, having been burnt badly by AML fines and falling foul of the regulator, are probably on a much more mature in terms of how they've train their staff, how they've implemented their policies and procedures, the controls they've put in place. But of course, this affects any and all businesses. So the smaller companies probably haven't addressed this to the same extent. They probably do have, a staff policy in place that people will have read and signed and understood, and that's probably the extent of it. So I think there's what they need to be doing is really looking at the framework that they've currently got at the moment, looking at the effectiveness of their controls and the policies that they've put in place, and be well aware that there could potentially become very material fines in the not so distant future. So it would really behoove them at this stage to ensure that they've got on top of this. But I think, as I said before, with the Bribery Act of 2010, this is where the kind of the maturity comes in. It's been around for quite some time, but in terms of the different adoption rates, particularly for SMEs, the small to medium enterprises, which was something that was called out by the OECD report, there is, a huge variance in terms of real adoption and implementation.
Yeah, very true. So, and you mentioned the fines, and clearly that's what hits the headlines when there is a corruption scandal. To what extent do you think maintaining corporate reputation is a driver of compliance?
Yeah, it's an interesting question. Having worked with many financial institutions on AML programs, be it remediation or global programs to strengthen their controls and processes, a lot of them, probably all of them, have always stated that they have a real zero tolerance for reputational risk, and hence the organizational change and cost to ensure that either they are implementing new processes and controls and technology to support those stated goals, or they are reacting to a significant fine. And I think it's probably true in terms of the level of management that you're at. But what is interesting is to what degree has reputational risk really impacted anybody? If you look back at the AML and sanctions breaches and the scandals from 2008 to the current day, around everything from mortgage-backed securities to ninja loans in mortgaging and the LIBOR fixing and gold price manipulation, front-running of forex deals, the very rare cases where humans actually beat algos at high-frequency trading, and virtually nobody's gone to jail or even really been held accountable for us. So one could argue that actually it's the kind of the cost of doing business, but I think that's really the wrong way to look at it. It's got to be really about culture, and the reputational risk and damage really comes in. And I saw this firsthand working in some of the big banks. Is just the scale of business disruption and business effort needed on a very multi-year basis in order to actually remediate, implement new processes and solutions and policies in order to get yourself back to where you were before you were hit by the fine. And to be honest, when you're on the pointy end of it and actually doing it, it's no fun whatsoever. It's a long, drawn-out, protracted process. Whether or not the reputational side of that means that much at the top of the tree, but I think it does, and I think it's an educational piece. But then you can tie it all the way back to when we talked about the BAE scandal of 2007, and really did that have any impact? But this could also be used as a form of competitive advantage, I think, by organizations as a way of showing and being able to demonstrate that they do take these corruption and money laundering laws seriously because of the global impact to countries, to individuals, and the fact that it's the right thing to do in society. So I think it's an education piece, and I hope we are moving very much more towards that direction.
Excellent. I have one more question for you, Nick, and then we'll see what we have from the floor. You mentioned culture, the culture of compliance. Do you have any thoughts, or have you seen any examples of how companies are managing to instill that culture well, as opposed to just forcing people to follow policies, but instilling a real culture of compliance?
Yeah, it certainly isn't easy, and I think what I've seen done well, if you look at parallels with anti-money laundering programs and financial crime compliance divisions and strategy and vision, and it does come back to I think it was said back in the FSA days. It's really about the tone at the top, the mood in the middle, and the buzz at the bottom. You've got to have, it's got to be set, the strategy's got to be set, it's got to be consistent right from the top of the tree. It has to be consistently communicated down, particularly through the business in the way that they operate, in the way that they should be operating, and all the way down to the most junior person for understanding the importance of doing this. And it's not just red tape, and it's not just, the business prevention team, stopping you doing business, but it's actually doing it for the right reasons. And for the reasons I articulated earlier around societal benefits and what have you. I think when you get that right, and it's not easy to change culture in a firm, then things should naturally shake out, and people will naturally want to adhere to those mantras and also act accordingly. The challenge then becomes, well, how do you know where to start? It's all very well if you're a small UK business that does business predominantly with UK companies, in traditional industries. But if you're, even organizations that, you could be a specialist machines tooling company that does a lot of business in, developing countries where bribery and corruption is rife, and the type of equipment that you ship and sell could well be open to, trade-based money laundering because of its very nature. Then it becomes much more difficult, I think, to quantify what that culture should be. But where you can take parallels and learn from AML processes in the past is to do an enterprise-wide risk assessment. And that's nothing more really than saying, where do we operate? How much of what we do is in which countries? What kinds of products and services do we offer? How do we offer those services? Do we offer them through third parties? Do we offer them direct face-to-face? What kind of control? It's almost like having the KYC piece of really understanding who your end customer is, who your end customer's customer is as well, and then taking a risk-based approach. You're not going to boil the ocean overnight, but if you know that you're doing 20% of your business in, the Sudan, which may be a tad of a bad example because it's a sanctioned country, but you can, if you look at higher risk jurisdictions, then particularly, you look at the Middle East and the way business is done, there is higher risk of bribery and corruption over there. And I think it's about how you articulate the way that you do business, with your salespeople and service people as well, that can, basically help influence and shape that culture. And then it's really about aligning your greatest risks around the controls and the policies and processes, and the technology that you've got to support that, because you've got to be able to have, oversight and information and data to support, your quest against falling foul of bribery and corruption laws. So that if Mr. Charles Kane does come knocking, you've got a very robust risk methodology and framework for anti-bribery and corruption, that you can, show that it's implemented, it's working, and it's demonstrable, even if it has holes in. And then that kind of takes, the maturity side of things is you want you want an ongoing optimization framework and program. And if you look at something like the ISO standards 37001, that is a very good place in order to ensure that your policies, your processes and procedures, and your controls are in place and are regularly adhered to, and that it's an ongoing optimization, an ongoing journey, if you like, to ensure that you've assessed all of your risks, you know where they are, and you put the adequate controls in place.
That's great. I think there's some great points that you've made there. So just before we move on, I wanted to go back to Pat and see if we have any questions to take from the floor.
Great. Thank you, Nick, and thank you, Magali. That was an excellent summary there, Nick, about the risk-based approach. That was excellent. So just a reminder to the audience to ask questions, use the questions tool on your GoToWebinar, and we are reviewing the questions that come in. And as we wait here we did get a couple questions here, Nick and Magali, to ask you. And as we wait for the audience to see if anyone has any other questions, I wondered, Nick, if you could just tell us a little bit more about the C6 group and what you all do there.
Certainly, yeah. Thank you very much, Pat. So, C6 Intelligence, we've been around for, 12, 13 odd years. We're a UK company who was recently acquired by Accurus, the Accurus Group, a couple of years ago. We essentially provide a proprietary database around PEP sanctions and adverse media, which is historical. It goes back to the inception of the company. And we provide that data as well as KYC type applications for employee monitoring and customer screening purposes, and the solutions to provide that. So we deal with any company basically that is impacted by anti-money laundering and counter-terrorist financing regulations, from a number of tier 1 banks all the way down to small law accountancy firms. And interestingly enough, around ABC and where I think things are going, is that the necessity to do due diligence on on business partners and your customer's customer, even if you're not caught up within the AML regulations, it is something I think will become more and more good practice, if you like. It gives you another level of comfort in terms of how you go about ensuring that who you're dealing with is in fact the right kind of relationship, the right level of risk that the business wants to do business with. So that's it in a nutshell. And we also, I suppose the other aspect, we provide fraud as well. So we have a proprietary database of fraud data that we take from the dark web, particularly for compromised ID, so we can see how people's identities are being traded between various criminal groups on the dark web, and we can provide that information to our customers to help them with things like GDPR, and also from a retail perspective to protect yourself in case your postcode or your address, or indeed if your potentially your credit card or card information is being transmitted.
Great, thanks. That provided helpful context. So you mentioned some countries and regions where you saw the risk of corruption was higher, and we got a question about industry sectors. Do you see any industry sectors or areas where you see a similar type of higher risk of corruption, and do you have any recommendations on what customers should do in those areas?
Yes, that's a really good question. Certainly, industry is very important. There is a huge difference between, your mom and pop retail store around the corner being associated with bribery and corruption and payments versus, the example we gave here would be arms dealers or aerospace type companies operating abroad. Essentially, any the more money that is involved in regions that are less well governed, shall we say, introduces much more risk. So extractive industries, oil and gas, mining, particularly diamonds and gold, operating in parts of Africa and South America, those types of industries will by necessity open themselves up to greater levels of potential impact, because you are talking huge sums of money. Recently we saw with the Italian oil company Eni and Shell, and the fact that they've been they were paying huge bribes to to a government official, I think in Nigeria, if memory serves me right, and the outcome was that they said no, we were completely innocent, what have you, and then Transparency International, I think it was, or Global Index, or Global Corruption, leaked some emails literally a week later, showing that they had in fact been in collusion with each other. That obviously opens up the whole reputational risk aspect, and is a pretty sticky thing to deal with, let alone the fines that are coming down and the regulatory oversight and scrutiny that will become will necessitate the actions off the back of that. So what you want to try and do is to ensure that you're not closing the door after the stable door after the horse is bolted. What can we do around that? Well, if you look at a good source is really around adverse media, and looking at your customers and your suppliers, and looking at whether or not they are potentially caught up in any of these issues. You know, if one of your major suppliers or vendors, you know, has the whiff of corruption about them, or they are caught up in events, then you know you can then start to put in place more robust processes and controls, and have those frank conversations, and then decide whether or not you want to exit the relationship or maintain it. That's one aspect. I think if you're the company that you've got business operations in those jurisdictions, what can you do in order to stay on top of that and make sure that your stated policies are being adhered to? It's probably in terms of implementing the right organizational framework, the right risk committees, the right review boards, so that when contracts are coming up, you need to look at the transparency of those contracts and the payments that were made, or the bidding process, who's involved, certainly around due diligence of the partners. So the example I gave with Eni and Shell, the African minister that they were paying off, where was the enhanced due diligence reports requested around this individual? Even to the extent that the size of sums they were looking at, there should have probably been a boots on the ground kind of investigation to ensure that that it was complete and above board, and that there were no nefarious activities going on. So I'd say those are a couple of ways of looking at it. It's really around the due diligence. It's really around ensuring you've got the right organisational structure in place to escalate. And finally, I would also probably recommend, and this came off the back of the OECD recommendations, or one of them anyway, was to ensure you've got the right whistleblowing avenues internally, and that they are seen to be effective and non-discriminatory, and that way you can actually ensure that the culture starts to self-police itself,
Great. You actually segued into a couple of other questions that we got. And as a reminder, we do have a little bit more time, so if anybody has any questions, you can submit them through the question tool on the GoToWebinar there. So a couple of things. You mentioned the OECD report, and you mentioned frameworks. On the OECD report, can you give a quick summary of the key recommendations that you thought were most critical from that report?
Sure. So around whistleblowing. So basically, what they talked about, proceeding with the working group's intention to ensure that they are, you're reviewing whistleblowing provisions with a view to improving and raising public awareness. The whistleblower type reports, those pathways, ensuring you've got the right the right oversight and bodies that can actually make decisions around that, and that it's seen as well as it's not discriminating the person who's raising that. They are protected. They are able to voice their opinions in a manner that is confidential and will be seen to be carried out, and not as not essentially as a gateway to controlling that flow of information. Enforcement resources. I think the other aspect that came out for the UK was really around the SFO's budget, and ensuring that they had the right resources to be able to go after the right cases, and that it was commensurate then with the type of crime, and not to be going after necessarily just the bigger ones where potentially they can't fight. And also making sure that people like the NCA, the National Crime Agency, have actually got the right and adequate resources. Because I touched on the point earlier on around SARS and the fact that they're sitting on over 2 million SARS. Well, that's really quite a shocking acknowledgement, because it just shows that they have not got the right resourcing level to actually look into it and make a determination. And then that has a massive knock-on effect as well for the organisations raising SARS, in that they're not getting any feedback as to whether or not their processes and policies for raising these SARS to the governmental bodies are actually in fact correct. So you're missing out on that tuning aspect. I think there's a whole host of other aspects that would be useful to look into the report as well, because say 40 recommendations is quite a lot to go through.
Oh yeah, no, we don't expect you to go through all 40. I just wondered if there's anything that struck you. So yeah, certainly sounds like like a good resource that we can refer the audience to. So sure. The other question was about frameworks. So you referred to controls and frameworks a number of times, and one of the questions was about ISO 37001, and the question was whether you thought that, actually let me read you exactly the question. 1 second. Hold on 1 second.
That's okay.
What was your opinion of 37001? Did you think that was going to be effective?
I think like all of these things, the effectiveness comes from the ability for you to actually eat your own lunch, and the organizational commitment to implementing it and living and breathing it. And I can take, although we haven't implemented that, I can tell you that C6 has just gone through the ISO 27001 Information Security Management Systems certification. I'm very proud to announce that we passed, subject to some technical review. But I think what started off with that is, as you know, from a personal view of being, well, it's kind of like a tick box exercise. You've just got to get through it. It's just an ISO, what have you. To actually, it provides you with a very robust framework in terms of what your policies and procedures are. You've sat down with the key staff. You've helped shape it. You've helped understand where the risks in your business are. You put in place the right controls. You've got the right escalation and the right level of seniority from the organization to get it implemented and for people to actually abide by it. You then overlay the processes and technology to support even things like raising, incident management and raising of tickets and the workflow around that, and who has visibility, and the learnings that come off of that, the implementation of governance frameworks to ensure that things are being addressed and closed and also voiced, and being able to track it through KPIs. So how are we doing in 6 months, 12 months time, and have we actually met our goals? So the effectiveness of these frameworks, because they're not rocket science really, but what they require is energy, dedication, and as I say, the right organizational buy-in. And it comes back to culture too. We're not implementing this, or you're not implementing it just to say that you're ISO compliant. You're doing it because you want to strengthen your business, and you want to make sure that you can demonstrate that you're strengthening your business. So as I said, when the likes of Mr. Kane come a knocking, you can very quickly demonstrate through audit that you are living by your values, and that's really where the power of the framework comes, because you're then very confident that you actually haven't materially missed any parts out, or you're not addressing certain business units that are operating in higher risk jurisdictions, for example.
Yeah, makes sense. And we had another question about whether the implementation, how widely you thought implemented, but I think that your answer covered that, so that was great. So we have one more question for you, and then I'll turn it back to Magali for wrapping up with the questions. So do you anticipate that the intersection of Brexit and anti-corruption will have any impact on the flow of information between the EU and the UK, and specifically on personally identifiable information? Do you think that information flow will be impacted?
Oh, that's an interesting one. I mean, I think my short answer would probably be, I'd be surprised if anybody really wanted to pursue that. As I said, we're adopting GDPR next year. We're part of the 5th Money Laundering Directive going forward. There is a global push for more and more, or for the ability to more and more share personally identifiable information. Not just from a fighting crime perspective, but if you look at where Facebook and Google and Twitter have gone with all of this, then a lot of our data is passed around regardless. So again, I probably sound like a broken record on all of this, but to me, I would very much doubt if the drawbridges are pulled up by any of the countries, because it's not really in any, it's from a global perspective, it's more in everybody's interest to have this information shared. I think the caveat with that may well be around, people's concerns about organizations' ability to actually retain and not lose their personal information. And therefore, you may find that certain countries may adopt a more protective strategy because we're outside or potentially outside of the EU. And I can understand that that's for good reasons. And I think where to challenge that and where this space is going to be very interesting is to the extent that we adopt blockchain for our personal identity, and have our information held, not just individuals but also company information that is held as a distributed ledger on the blockchain for consumption by any organization that wishes to use it. So it's very much, I think, a watch this space. But I think if it moved away from or significantly away from not sharing personal identity information, then I would think that would be quite a big departure from the general direction that I see is still heading towards.
Excellent. Sounds like you just suggested another great webinar topic too. Thank you for that, Nick. So let me turn it back to you, Magali, if you have any wrap-up questions, and then we can wrap up the session.
Thanks, Pat. So yes, we are coming up to the hour, but Nick, I think we've got time for one final question. So clearly there's some uncertainty on where we'll end up on Brexit, but no uncertainty about the need to have an effective anti-bribery and corruption program in place, supported by robust technology. So how would you summarize what companies could or should be doing now with regards to their anti-corruption compliance efforts?
Sure. Well, first and foremost, I think this should be a bit of a wake-up call to reassess where they are and what they're doing with it. I think going back to what I mentioned about having an enterprise-wide risk assessment, the larger you are, the more geographies you operate in, the potential for bribery within your business, if it's heightened, really should require you to start looking or re-engaging with how you're addressing this, and to kind of benchmark yourself where you are on the maturity level of things. So, what are your peers doing? Are a lot of your peers already ISO accredited, or have they got similar type certifications in place? What are they doing? Definitely the wind, if you like, the headwind coming from the US around Mr. Kane, I think should really be the siren call for people to really re-engage and not be resting on their laurels. I mean, even though, as we've said through this talk, that the UK has been at the forefront of bribery, the Bribery Act since 2010, and the OECD obviously recognises that the UK has made great strides and good progress, and that we are seen to be up there as one of the major enforcers. The huge range of maturity for all the organisations that this potentially impacts is really quite vast. And whilst it may seem like more red tape and legislation for a lot of organisations, it makes sound business practice to be implementing this. But it's not a one-size-fits-all. So I think organisations need to look at that, and if you're in a medium, moderate to a higher risk category, then start thinking about the culture, start thinking about the frameworks and the controls and policies you have in place, and work out where you want to be, 12 months from now, even 18 months from now, and start putting in the right KPIs and measurements to track and ensure you're on that journey.
Good advice there. Thank you. Thank you, Nick. It's been great talking to you, and thanks for joining us today. And I will just hand back over to Pat to close up.
Thank you.
Great. Thanks, Nick. Thanks, Magali. Thanks, everyone on the phone, for joining us today. And just a reminder that you can follow us on LinkedIn for all the current information. The replay of the webinar will be made available on our website, and we will also be emailing out to everybody who was on the call a copy of the webinar recording within about 48 hours. And so thank you everybody for joining. Thank you Nick and Magali for taking the time today. Thanks everybody on the phone for taking your time. Hope everyone has a terrific rest of the week, and we will talk to you soon. Thanks.